Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, we've got Drikus Combrinck from Capicraft, Zwealakhe Mnguni from Benguela Global Fund Managers. Be sure to send through stock-related questions. Email stockwatch@bdtv.co.za, SMS 41392, on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time today. Drikus, let's kick off with you. Let's touch some results first. Investec numbers coming out. I mean, I don't know. They were just like, a bit Blair perhaps maybe. Maybe that's just banking in South Africa. Also a fairly modest ROE compared to some of the others. Your thoughts on Investec? Because our banks have generally had a decent year and don't look too stretched.
Yeah, it's quite disappointing to be sure. So what Investec typically likes, the share price or the profits of Investec, is it likes a strong property market, especially in the upper LSM categories or higher value properties, and we're not really seeing that. It's not doing badly, the property market, but we're not seeing a real bull market. I remember Investec printing big profits back in the mid 2000s. And we need a proper property market for that. They did well coming out of COVID, obviously, when interest rates collapsed. And I think they'll do well once interest rates drops another few basis points. But at 25 basis points here and there, just hasn't done it yet for them. So, maybe a year or two from now, you see some better numbers from Investec.
Zwealakhe, for you in Investec, it's certainly, the price does suggest maybe one of the laggers in the banking space.
No, certainly it's lagged, but I do think that operationally they've made significant improvements. I think their client acquisition momentum has been very good. I think what has affected this result, more importantly, has been the drop in the interest rates realized from their loan book. But if you look at the cost management, you look at the impairments within the range, and I thought it was a decent result given the environment. So I think that if one gives it some time, we may see improvement on this lower base of interest rates.
Yeah, and it is, and certainly the interest rate trend is going in that direction. Let's hope it continues. Let's touch on Lewis. Zwealakhe, I always say it's a bank masquerading as a furniture retailer. Typically nice high dividend yield, adding, I thought actually a fairly surprising number of stores. But Zwealakhe, your thoughts on the Lewis numbers and the valuation thereof?
Yeah, look, I thought, as you said, it's a bank masquerading as a retailer. They definitely did open the taps, and I saw the book grew 14%, but the actual sales grew much lower than that. The bottom line is they continue to execute very well. It looks like they are upper, what they call specialty retail, that grew almost 10%. So it does look like that element is continuing to contribute meaningfully, but it looks cheap. It's always looked cheap, and I don't know at what stage does it become attractive enough for people to buy it, but at this level, probably worth a punt.
Drikus, for you, Lewis?
Well, it looks cheap. It's on elevated earnings, obviously, but I can't see any reason for those earnings to collapse from here. It looks like they're executing well, like Zwealakhe just said. And 5.5 odd forward price earnings ratio, double-digit dividend yield. If they can maintain that, this thing is cheap as chips. Notwithstanding that it's a cyclical company, and while they're executing well, I think they're sitting at 40% gross profit margins. I think one of the reasons they're doing so well is, except for management that has executed so well, is that a lot of the competitors have disappeared in the last 10 years. So there's big space for them still to, some white space for them to grow into. Maybe it continues for another year or two. but you're not paying for anything going forward. You're getting paid to wait. So yeah, it's one of those that I didn't catch on early enough.
Yeah.
And it still doesn't look expensive by any stretch of the imagination.
Yeah, I didn't catch it early enough either. And of course, they do great share buybacks the whole time as well. Let's go to the big elephant in the room, not cheap as chips, Nvidia. So the market loved the results. They more loved the forward statement. Drikus, I mean, my sense is if they're disappointed, we would have a bloodbath on global markets today across everything. Our global stock market feels like it's been held up or maybe held to hostage by Nvidia.
Yeah, not only the stock market. I think the US economy as such.
Yeah.
AI spend all the capex that's going in that economy. That's a proper portion of GDP growth at the moment. I'm not sure about the figures, but I'd suggest it's up to a third maybe of GDP growth. It's just all the capex coming from AI and related industries. So takes that away, and you've got a much weaker GDP figure in the US. And not only that, because it's such a large portion, of the indices, all the heavyweights, the hyperscalers, Nvidia, who provides picks and shovels, etc., the venture capital industry and the private credit industry, which is enormous these days. All of them are doing well because of AI boom that we've seen. So there's this wealth effect, and this wealth effect, stock market at all-time highs, etc., that contributes to consumer confidence. And, that upper 10%, where the wealth shaped economy, the upper 10% is doing really well. And take away the wealth effect, and that 10% stops spending for a little while, and there's a big air pocket in the economy and in the market if that happens.
Zwealakhe, I mean, the stock was up, almost 3% yesterday. Results after the close, it's now in pre-market, it's up just over 5% as we sit here. Your thoughts around Nvidia? I mean, certainly it's been a stellar story. I mean, we're not taking that away from anything. If I zoom this chart out to just 5 years, we get a 1,300% return. I mean, does one hold it? Does one buy it? Do we just watch in wonderment?
Look, I think if one watches the volumes that are coming through TSMC, you'd realize that there is still a bit of momentum that's coming through to Nvidia. But I think the longer term picture suggests that we probably have seen the best growth rates. We will start decelerating from here onwards. So my view is that it's probably fairly valued at current levels. But if you're a short-term investor, you could take a punt on this. But long-term, I am a bit worried about their relationships with all these secular transactions that they had with OpenAI and many others. I think those are a much greater risk if either the energy doesn't materialize or doesn't materialize at the pace at which it is expected, or the funding dries up to the likes of Oracle, which would then create a problem for them to maintain the growth momentum. So short term, probably you can hold it, but long term, I'd be cautious.
Yeah, and the power is the thing. I mean, there is reports that there are data centers that are built and ready, but they can't be powered, and they just sit there. And one's now been sitting for 18 months waiting for the US equivalent of Eskom to flick a switch. Questions coming through, Zwealakhe. Blue Label with the telco, with the Cell C listing coming next week. Is Blue Label worth a look? They really are going back to their roots in many senses after their bit of a disaster, perhaps, with Cell C.
I think going back to their roots would be a fantastic thing for them. I mean, they had a simple business that was very well run, and they got distracted. And I think meaningful for them once this thing is listed. I'd be inclined to take a second look at it. I'd be also cautious about Cell C growth momentum after the listing. I mean, I think they've done well to de-risk the capex, but do they have the growth in the market? I think the environment's become very, very competitive.
Drikus, for you, Blue Label, I mean, they were just, in the days when they listed, and what's it, 15 odd years ago or so, it was where you bought airtime, it was where you bought your power for the house, etc. Blue Label, now that it's ex of Cell C?
Yeah, I'm with Zwealakhe there. I think it's a very competitive landscape. If you dissect MTN's recent numbers, you'll see that the SA division is taking quite strain. Vodacom isn't doing much better, and Cell C to a large degree is beholden to the guys with the towers. So I'm not playing in that arena at the moment. I'm just out of the sector as a whole.
Yeah. Yeah, look, it's a sector I've stayed away from, and I appreciate they've had a good year, but it hasn't particularly thrilled me. Question coming through around Brait, if that's worth having a look at. I'm not sure. They've got some Premier left, and I suppose they're promising to list Virgin Active at some point. Drikus, is Brait one you've had a look at?
Yeah, it's the one business have done quite well, obviously, but Virgin Active, I've got a few questions around. There's a lot of competition for Virgin Active these days. You've got Planet Fitness, you've got what's the other place I also don't visit? It's called F45 or something. It's all these new kinds of gyms coming with a lot of energy, coming to the fore, and I'm just not seeing the appeal there. No, I'm not too keen on owning it.
Yeah, and in some parts there's one called Viva, which doesn't have a swimming pool, but it prices about a third or so of what the Virgin Active story is. Zwealakhe, are you a Virgin Active fan?
No, not at all. I mean, I haven't followed Brait largely because I've got concerns around the capital allocation, and I've lost faith in them in terms of capital allocation. So I don't pay too much attention to their performance. Premier, as Drikus says, I mean, Premier is a good business within there.
Yeah.
But I'm not sure about the rest of the stuff.
Yeah, no, fair enough. Before we go to break, WeBuyCars, question coming through. I was hoping for a lower price. Is it worth it at current levels? It's having a fairly decent Thursday. So like WeBuyCars, there was lots of moving parts in those results, most notably Chinese vehicles challenge there, competing with second hands. Is it looking attractive at the sort of mid-40s?
It is starting to look attractive, Simon. I think there's one thing that a lot of things hinge on their execution. There's big execution risk that's grown into this business. So they are buying a lot of vehicles, and the price at which they are buying these vehicles tends to slide upwards as the environment gets tighter. And the pricing at the top, on the top line, is seeming to be under pressure. As you said, the Chinese vehicles are affecting them. So there's a lot of strategic maneuvers that they need to do to actually continue the growth momentum. But I think the current numbers were not that exciting, but I'm hopeful that they will improve as they go forward.
Drikus, WeBuyCars, your thoughts?
Yeah, there's a saying going around these days: if China enters the industry by the front door, profits leave by the back door. So the pure second-hand car market is under immense pressure. I think it will continue to be so for the next few periods at least, until those cars obviously come into the second-hand market, within 2 or 3 years. Then it's another story. And I also do see over the medium term that it's likely we have a stronger rand.
Mm-hmm.
So, WeBuyCars is still trading at a demanding multiple, and I think you'll get it cheaper later.
Yeah, I think it might come down a little bit as well. Question came through, Calgary M3 or Baldwin worth a look? We need houses in South Africa. Lower rates will help. Drikus, if my memory's right, Calgary was one of your picks a while ago. Am I misquoting you?
Yeah, Calgary is one of my picks. I think it's cheap here, trading at a fraction of NAV. Obviously, NAV, I think, might be over. If you think that it's weighted at, then you need a discount on that NAV. So, but even if you put a proper 30-40% discount, you still get to about 7-8 rand a share, which is much lower than it is at the moment. If interest rates keeps on dropping, affordability for their properties will rise, and I think they're in the right environment. They've got a new CEO at the moment, not a new face to the company. He's been around, but it's a new CEO, and I think the market is looking for some execution. And if the next period or two looks better, then I think it re-rates to, let's say, R8 plus.
Yeah. Ben Pilmer-Herber, who was CEO, 15 almost about years ago. Zwealakhe, Calgary M3 Baldwin, either on your radar?
Not really. I mean, the one thing that has worried me about this business is their ability to generate cash. I think they invest and then collect afterwards. I think can be painful, but it is cheap. I mean, there's no doubt about it. It is cheap. The question is, how do they monetize that NAV and get the cash in?
A question came through, two of them around the G20, both sort of pointing to the same thing. So, Zwealakhe, G20, I mean, it means a lot for, our potholes and our robots. I mean, I've had potholes that have existed literally 4 years are like gone in a week. And you know what, I quite like that, don't get me wrong. But the question is, does it mean anything for our market or our economy? So, Zwealakhe, I mean, it's a big party. I'm not sure that it necessarily does.
Look, it may be a positive step in that we are now out of the grey listing. We've also seen the medium-term budget that is quite constructive. So it may leave some room for some of the foreign investors to come into our market and invest on the ground. So I don't think it will make a major change in our economy, but I think it may actually start contributing positively towards the growth. So through the investment leg of the economy. But the short term, I mean, your consumption is a big driver, and that is subdued at the moment.
Drikus, I mean, I also saw 2 fighter jets in the air above Joburg. Apparently, we only have 2. So that was the entire Air Force was above Joburg yesterday evening. Drikus, I mean, we can debate whether it's nice to have or not, but I take Zwealakhe's point. What we need here is growth. We need consumption. And meetings are lacquer, but they're not a short-term fix in any stretch.
No. So we need, we've been saying this for 10, 15 years. We need some reform. At least we've seen a solid budget, medium-term budget. This may be the best one in 15 years from the minister last week. At least a big structural reform is getting inflation down to 3% target. That is huge. So you're bringing down the average cost of capital, the weighted cost of capital down for the whole economy. But there's a risk premium still embedded in this economy. The ease of or the difficulty of doing business inside here is just too difficult still. We need to work on that. Government needs to create a better environment for business which to flourish, and then that risk premium will come down with a lower inflation rate. If both happens, if you get a 3% inflation rate and the risk premiums drop a few percentage points, then we'll get a screaming stock market, gents.
Question coming through around Meta platforms. Of the Mag 7, it is lagging. It's negative for the year. My chart actually says it's up now, so it's a 1-year chart. It is negative for the year. Should I be having a look at Meta platforms? Drikus, for you, some Facebook, Instagram, WhatsApp?
Yeah, look, they just tapped the credit markets basically for 60 billion, 30 billion on their own, 30 billion on a off balance sheet. That private creditors will be on the line for smart from Facebook, doing that off balance sheet basically. But yeah, just this whole AI thing, if you can call it AI, LLM is not real AI in my opinion, but it's neat. It's doing, I think there's a future for it, etc. But at enormous upfront costs, and until they can justify, it from an economic standpoint, I'm just staying away from anything AI related at the moment. Not there are some few adjacent industries that we're doing. We own some land in the Permian Basin. We own some. I think you could look at Micron Technologies, for instance. That provides what do you call it? Memory chips basically, and not GPUs. Just the narrative is too strong for me. It's just counter to my way of investing, I guess. It's too many red flags for me.
Yeah. It's lucky for you, some meta platforms?
Yeah, I mean, I think they've got a very good franchise
Sure.
in the user base, different franchises that are generating strong ad revenue. I think the build is actually a drag to some extent, but also the fact that they don't seem to have a very clear strategy around how they actually going to participate in the AI wave, whereas others have a bit more structured approach. So I think it's underperformed, and it might be looking like an opportunity for the long term. I think their main business remains a very good business, very strong business, cash generative, but I think the short term is a bit hazy because of this AI build that they are lagging behind in terms of strategy.
Yeah, and I'm not sure what their business model with AI. They've used it in ads, I get that, but I can see what Alphabet and others are trying to do with it. I'm not sure what Meta is. Question coming through around Grindrod. I bought it earlier in the year. I'm up 50%, not complaining. Do I carry on holding, or do I take some money off the table? So lucky Grindrod has had a fairly flyer of a year. I think, in fact, from the lows, it's probably up closer to 70. Would you continue to hold Grindrod at these levels?
I would. I think I'm constructive about the outlook for commodities, and I think their ports business has handled a bit more volumes this time, but it may continue. The logistics were under pressure because of the riots in Mozambique, and those have been taken out of the way, so they should see more volumes going towards their terminals. So that should be positive. So I'd be constructive.
Drikus, I remember you liked their shipping business they spun off. Of course, that's now been delisted. The remaining parts of Grindrod, would you hang on?
Yeah, we've had Grindrod for a long time, in and out of it, and they spun out a lot of value over the last few years. I remember buying at R5 and receiving a lot of stuff along the way. But it looks cheap at this stage. The remaining business, you can't compare Grindrod now with Grindrod from 5 or 10 years ago, which was a very cyclical company. Now it's a lot of those businesses have a big annuity chunk revenue in there. The ports business is basically monopolies to a large extent. The ports and terminals business, and I do regard it as a high quality company, and then the market is currently valuing it at. So I think it continues to re-rate, and a 10 odd PE, 4 PE that it's on, it's too cheap.
Yeah, and to your point, when it had the shipping business, it was deeply cyclical. And say you lose money for 9 years and then you make it all back in year 10. If you can time it, it was great, but if you couldn't, it was less so. Let's go to some stock picks. Drikus, you're going with Southern Sun.
Yeah, Southern Sun came out with some results yesterday. Not spectacular results, but remember that the comparable year was quite good as well. And the interim period is not the period that we're looking for. The busy period is the next 6 months, the 6 months that we're in at the moment. That's when they earn their big bucks. Utilization rates have crept up above 60%. I think that continues to about 65%. And there's a lot of operating leverage in there as they, continue to add, or they continue to utilize their latent capacity. So not cheap. It's a big property underpin. There's always a big chance that they unbundle the property from the operating company. That's happened elsewhere, and I think there's a big value unlock in there, and it's trading to quite a steep discount to what those properties are valued at. We talked about the cost of capital of the economy coming down with low inflation rates. If that were to happen, obviously your fixed property like hotels will be worth more as well going forward.
Yeah, and in fact, I think in their presentation they commented that October's been their best occupancy since the World Cup in 2010. So things going in the right direction. So lucky, Mr. Price, results out today. The market loving them. 3 billion cash, no debt, lots to like in your stock pick today.
Yeah, certainly. I think I am looking at the SA economy more constructively, as we spoke about the lower inflation targets. I think that'd be supportive of more volume for these retailers in South Africa, and we're likely to see that because they're in the lower value segments, they're likely to be defensive even if there was a bit of a drag in the economy. So I think it is looking like potentially a good investment at this point in time for the long term in South Africa.
That's all for Stockwatch today. Thanks to our guests, Zwealakhe Mnguni from Benguela Fund Managers, going with Mr. Price with results out earlier, and Drikus Combrinck, Capicraft with Southern Sun, whose results were out yesterday. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.